maybe some amount of the current year order book executed. So about 5,600 crore turnover is a reasonable possibility, right, for the current year?
Again, specific numbers we are not in the habit of disclosing. But yes, if you look at the breakups, something in the similar vicinity is what we are looking at.
Okay. Thank you.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, sir, and thanks for taking my question. Congrats on a good set of numbers. So two questions from my side. One would be great if you could discuss how are we seeing the private sector ordering as far as the wagon business is concerned. And second, also on our brake business, how has the ordering and tendering been in FY24 and how do we see FY25 panning out? Thank you.
Yeah, thank you, Parvez. In terms of the private order book, as I mentioned that, the order inflow is very strong. And this is despite the fact that currently wagons under GPIS scheme, basically the box and wagons, there is still the railway has not lifted they had put a temporary hold on that, which we also expected to get lifted post-elections. But despite that, I think the order book has remained very, very significant. And we are now executing a lot of designs which are very unique and are being done for the first time. And where Jupiter is maybe one of very few of the wagon builders who are executing these designs. So this gives us a significant chance to improve our margins as well as to further build on these order books. And I think as and when the requirement for the box and wagon comes up, I think that will be significant because whatever we can understand from the industry is that still there is a huge requirement for these wagons. So as and when railway clears the same, you will see a substantial jump in terms of the ordering, which is going to happen in those.
Thanks, sir. And similar outlook on the brakes business?
On the braking side, I think the demand continues to be very robust. As you know, the rolling stock program of the railways is very significant. So as well as now you are seeing a lot of replacement demand coming in because both in terms of the passenger as well as on the freight side, the fleet utilization has gone up significantly. So I think you're going to, as I've been mentioning, I think year on year you're going to see significant increase in terms of the total requirements for braking from the braking business.
Sure, sir. Thanks and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Gagandi from Invest Analytics Advisors LLP. Please go ahead. Yes, Gagandi. Participant line got disconnected. The next question is from the line of Rishabh Parekh from Sunidhi Securities. Please go ahead.
Can you just throw some light on our container business?
Yes, Rishabh. So the container, we are again very bullish on the container business. This year, I think, has been a transitional year for us with regard to that business. We have moved from earlier we were making the very generic marine containers, but this year we have moved on to manufacture very specialized containers, especially related to BESS and data centers. So that has been our core focus. We are now working with a lot of marquee names, global names such as GE, Schneider, Toshiba, Tata Solar. So these are the kind of names which we are now working with, and there are certain containers which we are producing, which are being produced for the first time in India. And I think going forward, we will continue to focus on these segments. And I think the next step this year, which we are moving towards, is providing the complete integrated solutions, both for BESS as well as for data centers. And given government's focus in both the segments, and especially for power storage in the solar sector, that has been a key challenge. So we see significant order books coming in this segment.
And just wanted to understand your capacity expansion plan, because in your presentation it mentions that 1,000 wagons per month will come on stream once the 2,000-ton foundry is started, which will take 18 months. But to the previous participant, you mentioned that it will start in Q2, the run rate of 1,000 wagons per month. So I was just a little confused.
No, 1,000 wagons will come. See, we are doing two foundry capacity expansions. One is on the existing foundry, and one we are looking at a new foundry in Jabalpur. So the 1,000 will come in as soon as the expansion which takes place in the existing foundry, which we are expecting in Q2, before end of Q2, that capacity will become online. So that is when around that time is when also we are going to see an increase in our wagon numbers happening.
Understood. And the additional 2,000-ton foundry will add how much capacity?
So there, given that, one which will definitely help us in terms of margins, because again in Jabalpur, if we have a captive capacity, we'll save a lot on the transport costs. And secondly, we are looking, I think one business which we are very focused on is on the weldable crossing side, where we have significant orders and the outlook is very strong. Because I think in the next 3 to 4 years, what we can understand is the railway is looking to buy more than 100,000 of these crossings. So today our main constraint is on the capacity. So we are now looking to build significant capacity for this business. So I think a lot of that capacity which will get freed up will go towards that business.
Understood. And sir, can you just throw some light on a rights JV?
There is no JV. We have a MOU with RISE where we participate together in a lot of the most of the global tenders. So that is that MOU continues, and we are regularly participating in tenders. I think the global tenders take time to convert into order books, and we expect, I think in FY25 we should see significant order books coming out from these tenders.
And so last point on
interrupt, Rishabh.
Sure,
I request you to rejoin the queue.
Sure.
Thank you. The next question is from the line of Akash from Dalal and Brocha. Please go ahead.
Yeah, thanks for the opportunity, and first of all, congrats to the management on the great set of numbers. So, sir, would request a breakup for the complete full year FY24 revenue that we did of 3,640 odd crores. If you could give a breakup for that, product segment wise.
Okay. Thank you, Akash. And I'll pass on the line to Rajiv. I think he could share.
Akash, you can mail to us. We will give the detailed breakup. Right now, I am not carrying that breakup. But on a broad way, around 76 or 77% is from the wagons, and balance is from the other CV business and containers includes.
Okay, sir. No worries, we'll take it offline. My second question was on the brake system and the brake disc side, sir. Wherein you all said that both businesses combined, you all should be able to manage around 300 crore plus of revenue, right? So what kind of margins are we expecting there?
Again, as I've mentioned earlier, the margin profiles are much better than in terms of our existing business. So, you will see margins upward of definitely upward of 14-15%.
For Covis and Daco, right?
Yes.
Or company level as a whole?
In these two businesses, at that business levels.
Okay. Got it, sir. Secondly, we had some interesting order wins this year, especially, we won that special military wagons wherein they were the higher value wagons, also the double-decker wagons for automobile. If you could just let us know what is the delivery schedule for those kind of wagons, the orders that we won this year from Indian Railways?
So we are continuing to supply the military wagons, that is ongoing. For the double-decker wagons, our prototypes are going to go for approvals in this month itself. And I think August or September is when we are looking to start supplying those wagons.
Okay, and the recent one which we won in March, that is the...
Akash, can you rejoin for your follow-up questions? Thank you. The next question is from the line of Rahil Dasani from Mittal Analyst. Please go ahead.
Yeah, am I audible?
So can you be loud?
Yeah, is it better now?
Yes, sir. Please.
Okay. So first of all, good afternoon, sir, and thank you for the opportunity. So I had a question around the Vande Bharat. So we can see a lot of Vande Bharat tenders coming in right now, and the bidding here is quite competitive from the international players like TMS, who recently won the 120 trains tender, and the next in line are Alstom, Schaeffler, and the Titagarh JV. So what sort of participation do we expect from our side, excluding the wheel sets and any upcoming tenders where we are taking part?
So, excluding wheel sets, I think on the braking side, we have significant participations in these. We are you will see Jupiter coming in. Along with that, I think from Siemens, we have received an order for supply of battery systems, which is part of the EV side of our business for the Vande Bharat. So yeah, definitely, I think, and wheel set is something, again, I think, as for the wheel set, as I mentioned, that we are a significant supplier for wheel sets for the Vande Bharat. So all these, I think, if you look at these 2-3 businesses which I'm talking about, say, if you look at a coach, the value ours would be about anything between 30 to 40% of the total overall value of a coach.
Okay. And lastly, like I said, these 3-4 entities are who are dominating the tenders right now. So are we partnered with any of these entities, and how do we see the competition between the Indian JVs in comparison to these international entities?
So right now, see, we are, as I have told you, we are working closely with the likes of, Siemens, but definitely we are not partnering with them partnering with anybody to bid for the tenders, because again, which we feel that these are very margin negative. Right now, the pricing is very margin negative, and in future also, we don't see many significant tenders for Vande Bharat, for the complete supply of Vande Bharats coming, because most of the railway workshops are now manufacturing it. But there is a significant demand for the component levels, such as, the brake systems, the wheel sets, the battery systems, and that's where, these are very high technology items. So, it's again, the competition is very limited, because it requires a lot of accreditation and technology. So these are the areas where we are focused on, and I think we are in a very strong position. So that is where we will continue to focus on.
Okay. And lastly, if I'm not wrong, we were...
Sorry to interrupt, Rahil. I request you to rejoin the queue for your follow-up questions.
Sure.
Yeah. Thank you. The next question is from the line of Ankita Rathi from Rainbow Securities Private Limited. Please go ahead.
Hello. Hi, thank you for the opportunity. I have a question that in your PPT presentation, I mean investor presentation, you have mentioned the GWL COVIS numbers. So the numbers in brake disc assemblies are 0 in quarter 4 FY24. Can you just give me the reason for it?
Ankita, I'm honestly have not looked at those. I have to revert back to it. But yes, I think the reason could be that we were focusing on the export. I think quarter 4 is where we were looking at. We had a lot of export orders, so our focus was on the exports. So the assemblies, I think we have already started from FY25. And what I can understand is that at that time, we had all the old orders which we had, those deliveries we had completed. And for the new orders, we have currently orders for about 12,000 brake disc supplies. The deliveries were all commencing from Q1 FY25. I think that this was the only reason.
Okay, about the exports, like the exports number are also not very high. It's only 606 numbers in quarter 4 FY24 rather than it was 2194 numbers in quarter 3 FY24.
No, if you look at that other components, 4199, that is also part of the export numbers. And I think in that last quarter, as I told you, the production was going on. All the revenues, you will see the revenue booking happening in Q1. So I think once the Q1 results come out, you will get a very clear picture of the trend.
Okay. And also one more question. The CMS crossing numbers.
So that's why you see that drop which has happened.
One last question. The CMS crossing numbers have also declined from the last year.
Ankita, I request you to rejoin the queue for your follow-up questions.
Okay.
So Ankita, to answer your last, as I mentioned that we are right now, in terms of the foundry capacity is a constraint for us because as you have seen that our wagon numbers have increased significantly. So a lot of the capacity was towards wagons, and that's why there's a drop in the CMS numbers. And as I mentioned earlier, that as we keep on adding more capacity, you will see a renewed focus in that business.
Okay, thank you so much.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
We did about 3,600 crore turnover in the year gone by. When do you think we can be 10,000 crore business? Saying 3 to 4 times? Would it be outlandish to think that in 3 to 4 years we can be that size? Or it's realistic?
So Balaji, definitely not. As I mentioned that once on the wheel side, I think once the capex is done, that is going to be a significant contributor. If we produce about 100,000 wheel sets, we are looking at revenues of upward of 3,000 crores there. Brakes, as I mentioned, in the next 3 years, we are looking that to be a 1,000 crore business for us. So definitely, we are very, very bullish and on our numbers. And no, I think 3 to 4 years you could overall at a company level definitely is something which is within our target limits.
So which means less than 1,000 crore turnover in fiscal 22, financial year 22. Say by 28, we can be more than 10 times the business that we did in financial year 22.
Yeah, definitely. Definitely.
All the best.
Thank you. The next question is from the line of Mahesh Atal from Atal and Associations. Please go ahead.
Yes, sir. My first question would be on, so the foundry thing that we are going to come up in Jabalpur, what would be the capital outlay for that?
I think we are marked about close to 200 crores, if I'm not wrong.
Yes. My follow-up on that would be, why we are looking to do it on a greenfield thing, when there are other foundries, when there are inorganic opportunities. Are you also looking in that direction to acquire any foundry or something like that, rather than waiting for 18 months? And because there are RDSO approved foundries, right? So, anything on that?
As and when if there's some opportunity comes up, definitely we will look at it. But as far as I know, given the buoyancy in the sector right now, there is no capacity which is available in the industry.
And one more thing, sir.
In the Deori, Jabalpur, we have a huge land bank available with us. So we are just utilizing that land bank.
No, that's okay. But I was more referring on the time, because it will take 18 months time for you to do that, right? So.
No, I understand. Anyways. But however, I don't think there is any capacity today which is available in the industry.
All right. And one more thing, sir. Regarding any thing right now we are having under testing approvals, which could add significantly to our top lines, which is under RDSO approval or something like that?
I think one of the most significant products is the weldable crossing, which is, I think we are going to get the final approval in a couple of months. And that, as I mentioned, that it's again, in terms of the approved sources, there are only 3 to 4 approved sources in that segment. And the indication is that in the next 2 to 3 years, because again, Indian Railway is moving towards high speed, so most of the traditional crossings will be replaced by weldable, and all the new lines which are coming up will have all welded crossings only. So
you are all the approved sources under this weldable crossing? Any names on that?
No. So whatever the interactions which we had with Indian Railways, they are very clear that the other sources which are there.
Yeah.
Mainly global players like Waslow is there, then Wilds Alpine is there. I think it's mainly the global players who are the approved sources.
So we will be the first indigenous players who will be doing that, right?
One of the first, yes.
Okay, all right, sir. Thank you. All the best.
So we have a foreign partnership already. We have a partnership with a Spanish firm called Talvez. They are one of the main producers in Europe. So they are helping us with the technology.
Any revenue guidance on this particular business? I mean, if we get the approval, and what could be the revenue potential of this particular thing?
So revenue potential is significant, but again, as I've told you, I think as and when we have the capacities available, you will start. So again, I think I would not like to give any kind of revenue guidance.
Yeah, but the current market size, at least in the Indian perspective.
So it is about the market is about for 4,000 to 5,000 crores is the market size.
And will be the only Indian player there. So we may expect a sizable opportunity there.
Yes. Indian player with sizable capacity.
Sure. All right. Thank you. Thank you so much.
Thank you. The next question is from the line of Senthil Kumar from John Drake Capital. Please go ahead.
Good evening, sir. Am I audible?
Yes.
Yeah. Thanks for the opportunity. I have two questions. First one is, for the additional capital requirements for expansion, will the board resort to equity dilution or preferably will go for a debt, sir?
So, certainly it will be a mix of equity as well as debt. The board, I think, has cleared fresh set of, I think, 1,000 crores of new capital fundraise the board has cleared. So it will be a mix of both debt as well as equity.
So what will be the mix, sir?
Again, I think we have not formed our plans. As once we have formed it up, we will definitely appraise you on the same.
Okay, understand. And my second question is, now that order share from the government is increasing, will this debtor period correspondingly go up in future? Actually, we have noticed that FY24 debtor days is increased from 37 days to 49 days. So what will be the debtor days for FY25?
No, I think it will, the debtor position, you will not see any kind of significant increase in the debtor position. It is going to remain between the debtor position, I think, is going to be very consistent.
Okay, thank you, sir. That's it from my side.
Thank you. The next question is from the line of CA Garvit Goel from Invest Analysis Advisors LLP. Please go ahead.
Hi, thanks for the opportunity again. Sir, just on the electric LCV side, why are we getting delayed in terms of getting the approval from the regulatory authority, sir?
So there is no delay. We are expecting the approvals. All our testing is now complete. So we are expecting the approvals to come any day. I think in the next week or 10 days, I think we expect approvals to be there. And I've maintained that July we are going to be launching a vehicle, and those timelines are pretty concrete.
Wonderful. And just on the technology part, I missed that. Can you please put some more color on that? Like you mentioned the new product that you are launching about market size of 4,000 to 5,000 CS.
No, I had only talked about the weldable crossing, which we had got a significant order from railways, and we are going to get our final approval very shortly. So I think the question was that what is the market size for that business? So I highlighted the market size for that business. But in terms of how our revenues will pan out, I think it is too early for us to comment, because a lot will depend on how our foundry how and when our foundry capacities come online. So depending on that, I think by end of quarter 2 or quarter 3, we'll be in a more realistic position to give guidelines on the same.
Okay, so thank you very much, sir, and all the best for the future.
Thank you. The next question is from the line of Priyesh Babaria from Max Life Insurance. Please go ahead.
Good evening, sir. Thank you so much for the opportunity, and congratulations for a good set of numbers. So my first question is on e-LCV. So what are our targets in terms of production for FY25 and FY26, and what kind of a revenue and margin are we expecting on the same? Or can you give some color on this business?
So again, in terms of margins, I think it is too early for us to comment. I think post the launch and when once we start supplies, we'll get a better feel on the margins. But one thing I can assure you that we are going to be from day one, we are going to be margin positive on that business. Secondly, in terms of numbers, again, I think first year we are looking to do upward of 500 vehicles. I think if we can manage that, we will be very happy with the business.
Sure. And my second question is on the JV which we had actually executed with the CAF, which is based in France and major players in the passenger mobility sector. Are there any updates on the same, or because we are seeing a lot of metro coaches which are actually coming up across India? So can you give some updates on the same JV?
So it's right now we had an MOU with them, and we are working on as you said, there are a lot of tenders coming up. So we are working on the metro tenders we have with them. I think as and when we win a significant bid along with them, you will see further updates on that on our partnership with them.
Okay. So are we expecting any kind of a win in this JV as such?
Again, these are very speculative. Whether we can expect a win or not, very difficult to